I think the big trend that we'll see over the coming few years is Bitcoin mining competing with AI for rack space. And what I expect, those mega centers in Texas that have been created for Bitcoin mining, we're already seeing it happen. You look at Core Scientific's Twitter account, you can see racks that were holding Bitcoin miners are now holding AI, Blackwell chips. And I think we'll see an increasing instance of that. And these big secure sites that are very well suited to AI will push Bitcoin mining out. And we'll see Bitcoin mining move more to the fringes.
Do you see maybe institutions slowing down on adopting Bitcoin, or maybe some kind of big failure happening in the Bitcoin Treasury industry? Because, if one of those big players is having some serious problem, that will impact the general kind of like corporation, maybe institution space. Do you see kind of like a threat coming from that space or not really?
Not really. People think that MicroStrategy's, or strategies they now call it, is a systemic threat. I don't think it is.
Hi and welcome back to the Financial Fox. I'm your host Steffi, and today on the show we are looking ahead at the key trends as we are entering 2026. Joining me on the show is James Butterfill, Head of Research at CoinShares, the largest and longest standing digital investment group in Europe. This year has been really interesting. We have seen different things, the Bitcoin treasury companies, the miners, and the all AI infrastructure space, the Bitcoin price having some, reaching all-time highs and then at the same time coming back down. So obviously there is volatility, but there's been a lot of development as well. And that's why I decided to kind of sit down with James, go through some of the things that I thought was very important for investors to kind of reflect on and, hopefully get to some kind of conclusions as we are entering the new year. So I really hope that you enjoy this interview. But before we get started, just a couple of things. First of all, I want to say a big thank you to Hive Digital Technologies, that has been a long-standing partner of the Financial Fox channel. They are a Nasdaq-listed Bitcoin miner and AI data center operator. Definitely one of the most interesting companies at the intersection of AI, compute, and digital infrastructure. They've been one of the best miners in 2025, and very interesting things is they are actually focusing on renewable energy and sustainability, at the same time putting shareholder values at the top of their priority. As running a public listed company is never easy, and when it comes down to the fringe of technology, but there are different components that as a company you look for, efficiency, you look at the share price, but then there is also value that you are creating, not just for the shareholders but also for the community that you operate in. And that's what they've been really championing on, particularly in Paraguay, where they are building their basically biggest data centers. I suggest to go and check out the website hivedigitaltechnologies.com and also buzzhpc.ai. All the links will be in the description of the video. But Buzz is basically their subsidiary that specifically focus on AI solutions. The other point I wanted to make is kind of a disclaimer, but is also very important because I'm a strong believer in education, and it's important to understand that the content that you find on our show or any other podcaster is only information, is our views, and is never intended as financial advice. So any opinions expressed by me or my guests are ours alone, and you should never act solely on the back of them. It's very important, always do your own research, level up your skills, and be accountable for your own decisions. Now, finally, I want to ask you a big favor. If you are watching our interviews, you're checking out our content on YouTube or on other social media, please take a moment to like it, share it, subscribe to our channels. Remember that your support is crucial for us to grow the channel so we can educate more people about Bitcoin. With that being said, let's get to the interview. Hi, James. How are you?
Hi. Yeah, great. Thanks for having me on the show.
No, definitely a pleasure. Today, I really wanted to talk about maybe the key trends that we are going to be seeing as we move into 2026, and maybe some of the consideration that you're kind of making. You are ahead of research at CoinShares and, dealing with investors, and you see kind of different trends and analyzing them as well. I think is really important to kind of see where we are. Some of the lessons as well that our industry need to reflect on. Yeah, if you want to start, maybe we can maybe talk about, where are we with Bitcoin? We have seen kind of like a pullback, and are we in a bear market now?
No, I don't think we are. I think, Bitcoin prices are being driven very much by monetary policy, just like they were actually a couple of years ago in 2022. Certainly there's political influences such as Trump and his activity there. That's been generally quite supportive this year, but why is it different to 2022? I think at the start of 2022, the Fed came in with incredibly hawkish monetary policy. This time round, it looks like the Fed is likely to cut further, particularly with the installation of a new Fed governor who's likely to be very dovish. And I think that's going to really support Bitcoin prices. So that's my main thesis why I don't think Bitcoin is falling into another sort of crypto winter, as some people put it.
So basically, you are saying that the 4-year cycle is dead.
Yes. I've never really believed in it. I think having come from a TradFi background, if you were to put together a trade idea or an investment thesis, and the thesis was based on, it's happened in the past and therefore it should happen again, you'd get laughed out of the room. And the thing about the Bitcoin supply is it's perfectly known. So why should it have an effect? It's perfectly known it shouldn't really have an effect on price. We can determine within an accuracy of around a week for the next 100 years what the daily supply is going to be. So it shouldn't theoretically have any kind of impact. Although I admit it does have a self-fulfilling prophecy to some extent, because there are a group of entities that do believe in it. I think particularly recently whales have been selling off because of it. But I do think the more important Bitcoin is what I describe as an emerging store of value, but also crucially one with a growth component to it. I.e., as the internet grows, imaginative things will be found to use Bitcoin for. And so it has that really having that store of value component means that things like monetary policy theoretically should have much more of an impact. And that's what I think is going to really start to assert itself in 2026.
Interesting. It kind of really makes sense that we have been in the space, you as well, for kind of so long that this cycle has always been there. And then you think about now regulation is different, is more supportive. We had institutional adoption. So what can really happen to get us in a bear market that everybody is blaming Bitcoin and, this is completely, we just go in like that. It doesn't really make sense. So maybe the 4-year cycle has never been there. Maybe we make it up. We made it up.
I think you're on something there, because another thing I didn't mention was back in 2020 when the halving occurred. It was COVID, and also the stimulus checks happened at the same time. You could argue actually that the 2020 data point for halving was just caused by stimulus checks, and we've only got a sample size of 4 for halving, so it's not really statistically that's significant. Yeah, I think we need to start searching for what genuinely fundamentally should drive prices. And for that, you need to understand what Bitcoin is. And I think it's, as I said, this sort of store of value with a growth component to it. And that's why I think it behaves a bit like gold, and other times it behaves a bit like a tech stock, depending on what the big scares out there. And you mentioned, in 2026, what are the big risks for Bitcoin? And this is something we've written about in our outlook, and looking at sort of the bull, base, and bear cases. And I think if you look at the bear case, it's something like stagflation, where we have higher inflation, the Fed has to hike rates. And that, I think, in that kind of scenario wouldn't be great for Bitcoin.
No, definitely 100%. I don't think we are really into kind of like that circumstances. But are you worried about quantum? Is that anything that, maybe as CoinShare, you have been looking into to be like a threat for Bitcoin?
Yeah, we've written several articles on this. I'm a bit of a dork, bit of a geek, and I quite like researching these kind of things. I wrote an article about 4 years ago, when it really sort of popped up then, and one of my colleagues wrote another article now. The way we see it, there's only a sort of limited number of wallets that are vulnerable to quantum computing. The University of Illinois did some really good work on just cryptography, and in a post-quantum world, i.e. when we reach equivalence, what cryptography would be vulnerable. And 128-bit encryption that people use every day in banking would be quite vulnerable. And using Shor's algorithm, you'd be able to crack 128-bit encryption within about 4 minutes. And at the moment, it takes longer than the known length of the universe to force crack 128-bit encryption. So that just goes to show the advancements that are being made. But that same paper by the University of Illinois highlighted that 256-bit encryption would be downgraded to something like 128-bit encryption. So it's still very much, would be still very much robust. As we know, Bitcoin operates on a SHA-256-bit encryption, but there is this small weakness in elliptic curve ECDSA cryptography that some of the earlier wallets, anything post-SegWit is not vulnerable, but there's some early wallets, like a well-known one, obviously Satoshi Nakamoto's wallets are vulnerable, all 22,000 of them. So what will be really interesting is to see if any of those wallets move once we get closer to quantum cryptography. But I also think we're quite a way away from equivalence or true quantum cryptography. But the main thing we should be worrying about, it actually might be very supportive for Bitcoin in the end, is that a lot of traditional finance systems are hugely vulnerable to quantum computing. And that's something people often forget.
Exactly. I think there's been different kind of voices around this like quantum threat. You see, some people saying, we are just 2 years away, everybody needs to talk about it. And then you see some other people maybe say, oh, no, don't worry, but I think it's important to kind of understand where we are. And you make actually a really good point, because all TradFi is actually built on a technology that is much more vulnerable to quantum than Bitcoin. Okay, so basically we take off the quantum threat. It's not something to worry about. There is no kind of like cycle driven by, hype or, fantasy. The monetary policy should be supportive and not on the other side. What about, if we go into the subject of Bitcoin treasury companies, obviously we have seen some kind of reevaluation, readjustment of halves, and many of them, they've been suffering a little bit. Even Strategy. So it seems like maybe the hype has finished in the Bitcoin treasury space, and maybe what I want to get. Do you see maybe institutions slowing down on adopting Bitcoin, or maybe some kind of big failure happening in the Bitcoin treasury kind of industry? Maybe kind of like, Strategy having some problems. And because, if one of those big players is having some serious problem, that will impact the general kind of like corporation, maybe institution space. I don't know. Do you see kind of like a threat coming from that space, or not really?
Not really. People think that MicroStrategies, or strategies they now call it, is a systemic threat. I don't think it is. He would never be forced to say it all off in one go. Then again, equally, I don't think his strategy for Bitcoin treasuries is a particularly credible one. He talks about having sort of hacks the TradFi system, and I don't think that's quite. And I always worry when we hear that kind of commentary. But I also think that a small set of companies have hijacked the kind of DAT theme, and it's morphed into its identity is quite different. So we were investing in these kind of companies 3 or 4 years ago in our fund, our active equity ETF here at CoinShares. It's got about $1.5 billion dollars in assets under management. And then we were looking at companies that had exposure to Bitcoin, that had Bitcoin on balance sheets. And we just called them Bitcoin treasury companies. No, in fact, we called them Bitcoin token holding companies is what we originally called them. And the original kind of thesis of all of this wasn't about sort of proxy exposure to Bitcoin or leverage play on Bitcoin. It was more about companies that wanted Bitcoin on balance sheet because they were concerned about the US dollar.
Okay, so maybe let's move on to Bitcoin treasury companies, which is kind of like a strange label because any company can hold Bitcoin, right? So why you need to call them Bitcoin treasury company? They could have any kind of business. So they are just basically being a company. Anyway, we obviously have seen some kind of like adjustment of the whole industry and of compressing, different share price of public listed Bitcoin treasury company going down significantly. Obviously, investors are not really happy. Even strategy and being suffering a little bit. How you see this industry and where you think we are moving if we look into 2026?
Yeah, I mean, the MNAB's average is below 1 now. So that means their Bitcoin holdings are worth more than the company itself, the net asset value of the company, which is an unusual situation. I think it would always sit around 1. At CoinShares, we've been investing in these types of companies for about 3 or 4 years. We have a fund that's $1.5 billion in size, and we've seen the industry really change. And I think it's sort of the identity of a Bitcoin treasury company or that has been hijacked over the last couple of years, particularly by MicroStrategy. One of the first companies we invested in was actually MicroStrategy. I think its original thesis as to why it would have Bitcoin on balance sheet back then was quite different to today. It was a proponent for responsible currency reserve or currency treasury management. They were concerned about the dollar and the longer term weakness of the dollar, the longer term decline of it being the global reserve currency, and they wanted to hedge away from that. And several companies have had the desire to do that, not necessarily into Bitcoin. And so when we saw this starting to happen, we thought, okay, it's a good exposure for our fund. But that has slowly changed, and MicroStrategy is a good example of that, where it started to become much more about a proxy for Bitcoin ownership because its tech business, particularly now, is a tiny proportion of its overall holdings. And in fact, it doesn't, if you look at currently its pref shares and other interest expense payments, it doesn't make enough in its tech business to cover those holdings. That's why it's regularly diluting shareholders right now. But it went from this treasury company to a sort of a Bitcoin holding company in a way, and now it's become this kind of leverage play on Bitcoin, although it's not really performed that function as a leverage play on Bitcoin. And I think that's where it's really been hijacked. And then we've had other companies. Metaplanet, for instance, has been very successful. It's a hotel. It's not a hotel chain. It only has one hotel.
Not yet.
Yeah.
Yeah.
So, but there that's very much a proxy trade. The Japanese can't hold Bitcoin ETFs, and so Metaplanet is a good alternative to that. But underlying it, I think there's masking what is this original thesis of companies employing a responsible treasury management and holding Bitcoin because of long-term decline of the dollar. So I do think looking into 2026, we will see more and more credible companies get into this space. We've already seen Meta and companies like Microsoft consider it at least. But I do think we'll see more and more companies. And there are some companies like Semler Scientific, for instance, or Tesla. They have Bitcoin on balance sheet for treasury management reasons, and they're credible companies. But you wouldn't necessarily call them DATs. So I think we'll see this divergence between sort of 100% Bitcoin holdings and nothing else, and ones that hold Bitcoin on balance sheet, which I think is perhaps a more credible investment thesis.
And like you said, it's about treasury management, and that's why Bitcoin can become an interesting asset to better preserve value, especially if you are a publicly listed company that you need to think also about your shareholders as well. So I do agree with you. I think we are going to see more Bitcoin treasury companies, but it will be different from what we have seen so far. And that doesn't mean that there isn't space for people to be creative with the treasury. I mean, that's what company can do. You have got something on an interesting assets and you can do something with it, but that will, I think that we will see definitely a diversification, and what strategy is doing. I think it's quite interesting because it's like, can you build a new digital credit system on Bitcoin? I mean, they are trying to do it. That doesn't mean that they will succeed, but they are definitely getting some traction. So basically, we see a transformation of that. You are expecting more names, household names, to buy Bitcoin. Now, let's maybe talk about the Bitcoin miners, because this is a very interesting industry. They have been the first Bitcoin treasury companies, actually. And they fast forward, a couple of years, they have become really key player in the energy industry. And if we look at the infrastructure, the AI infrastructure of the future, they are really positioning themselves as the builder, the operators of those data centers. And I saw that you have wrote a report recently, and I really would like you to kind of give us a good overview of what you think about the role of these Bitcoin miners and how they are evolving into the new years. I'm kind of try to think about what's next for the industry. Because in this year was all about Bitcoin AI. Okay, that's fine. Bitcoin mining and AI. Now we got the dual strategy. Now what's next? What are you expecting?
Yeah, I mean, Bitcoin miners, they've been sort of reinventing themselves a little bit for quite some time. They had the hosting models that didn't really work particularly well. And they've always been trying to find their identity a little bit. And maybe there's always been, not by all of them, but there's always been some sort of effort to diversify their revenue streams. I think along comes AI, and suddenly it is an opportunity to diversify their revenue streams. Although AI is a lot more complicated than Bitcoin mining and a lot more expensive. Bitcoin mining roughly is about $1 million a megawatt, whereas AI is more like $15 to $20 million a megawatt. So a lot more capital expenditure is required, but a lot of them, particularly in Texas, we're one of the largest, CoinShares, one of the largest investors in Bitcoin mining companies globally. We have around $700 million of assets under management in Bitcoin miners. And so we've seen a lot of them all around the world, but particularly I think what's really interesting in Texas is they sit on these sites now that are mega scale. So they course call the site for Riot blockchain from if a 1 gigawatt, how it has a 1 gigawatt power feed into it. Just to put that in perspective, 2 million, 1 gigawatt could power 2 million average homes in Europe. So it's a huge amount of power. It's in a sort of quite safe site geographically. It has this huge power in it. It also has a couple of huge 10 gigabit data pipes, and it's building these giant warehouses, 200-meter long warehouses that they have been using. The first two there they've been using for Bitcoin mining, but the second two have been earmarked for AI. And they already have some AI components in some of their warehouses. It's just because they fit. They have the power, they have the security, they have the sort of very secure data pipes. They need very high uptime, unlike Bitcoin mining, AI does. So it kind of makes sense that I think a lot of the hyperscalers are looking towards Bitcoin miners to fulfill the AI demands that you need at data centers. It has been not easy for some of them. There's been some very heavy due diligence going on with these companies. But at the moment as well, we reckon only about 10%, 10 to 15% of revenues comes from AI. But in our 2026 outlook, we talk about this, that we think even within a year, it could be 80% AI revenues and just 20% Bitcoin mining, assuming Bitcoin prices stay level at this point. We're going to see a huge flip around or turn around in where Bitcoin mining companies source. And this is a kind of challenge of identity for us now. We have an investment fund that is specifically for Bitcoin miners, but whether we like it or not, it's going to be Bitcoin miners and AI. So it's quite a big challenge for us, but a hugely interesting turnout for the Bitcoin mining companies. And I think it's actually a very positive thing to see these diversified revenue streams.
No, then I was talking to the CEO of Hive Digital Technologies that I know you cover as well. It's like the ability to convert the tier 1 data center into tier 3 data center. It's just much more efficient, much faster than completely building it from scratch. So that's why, they can be really uniquely positioned if they can do this data center conversion in a more efficient way.
I mean, it's not for the faint of heart, right? I mean, they call it 4 nines. You need 99.99% uptime in AI. With Bitcoin, it doesn't matter if it turns off for 1 minute and on the next minute. And there are huge contractual penalties for not sort of for having any kind of downtime. So we're talking about, you can lose a year's worth of revenues in 2 weeks of downtime. So you have to have a really serious data redundancy systems, power backup systems in place, and that's why it's so much more expensive. But in the bottom line is that actually margins are wider for AI at the moment, and that's why it's so attractive to these miners.
How do you evaluate those kind of companies? Because I think it's quite important to kind of set some metrics, as many of your clients are investors. Many people watching the show are looking for, what are the things that they could consider for kind of investment. Obviously, Bitcoin miners, they could be an interesting industry. So, what do you look when you are assessing a company that, is a Bitcoin miner and an AI data center operator?
Yeah, just look specifically at Bitcoin mining, first of all. Okay. I'd say the first thing you have to understand, with Bitcoin mining, there's different costs of production for Bitcoin mining. And there could be 2 miners in the world receiving 450 Bitcoin a day at the current halving, or there could be 2 million miners. So we don't know the exact number, but it's a high number of people doing it. So it's quite a competitive space. So what you really need is the ultimate thing or metric is to look at their energy costs. If it's high, they're less competitive, their margins are tighter. And if it's low, they're much more competitive. And particularly this is important when prices fall like they have done recently. Those that are at the lower end won't have to turn off their rigs. Those at the higher end of the cost curve will. And so we tend to look at the hash price or the hash cost, or more simpler way of looking at it is the amount it costs to make one Bitcoin. And so we would always focus on those companies at the lower end of the cost curve, definitely.
Can I just stop you here and ask you a question? Because cost for Bitcoin is kind of like, can be a misleading metrics, because some companies would include, G&A cost into that. Some others they want, and it's not like a straightforward metric. It really depends what the ways of accounting, right, that you are considering. And sometimes, maybe the operational efficiency and the strengths are kind of penalizing to that.
Yeah, so if you just take everything, all in costs, cash costs, SG&A, compensation costs, stock-based comp, everything like that, so the depreciation, etc. Most of them are not actually trading at a profit right now. And a lot of the price you see in the markets for these companies is reflecting the hope that prices will rise and profits will improve. And there have been times when profits have been very negative, and Bitcoin mining companies have been guilty of diluting shareholders to raise capital and keep them afloat in many respects. So, and there's always been this continual game of just buying more and more hardware, trying to be the most competitive. And when does that ever end? I don't know. And it's funny with Bitcoin, it always ends up being, or Bitcoin mining, being a game of who's the lowest cost. And that's where the potential profits lie, I think. And that's why we always have that kind of focus. But we also look at it in a report that we've written. We don't include the depreciation because it becomes quite tricky to compare apples for apples because of the way depreciation is handled differently from one company to the next. And it can be quite a subjective thing. Do you depreciate a bit of mining hardware over the course of 2 years or 3 or 4 years or 5 years? That can make a material difference to the average cost per Bitcoin. So that's why actually the hash cost is slightly better approach, but it's a bit harder to understand. The nice thing about the cost of Bitcoin is it's a very simple metric. You can see how much it costs them to make a Bitcoin and how much the current Bitcoin price.
I get you. It's also kind of trying to simplify something that is not so easy. I mean, the other point is that many of them are actually issuing debt to finance the AI expansion rather than using cash flow from the operation and maybe issuing of equity. So, obviously when the market is not so upbeat, then that could become, a challenge as well for many.
Well, I think, they've had 2 options in the past, either issue debt or dilute shareholders. And it's been much cheaper to dilute shareholders and very expensive, and yields are very high to issue debts. But with AI, it's different. This industry, the debt costs are much, much lower. And therefore, it's been much easier for them to raise debt on that front.
There is
one point about renewable energy and sustainability. I want to bring it up just because I think it could be really quite interesting considering, for example, right now there are company working in the natural resource space. They are actually trying to see way to use the wasted energy, maybe to produce Bitcoin or digital assets, kind of, this sustainability kind of concept. Part of Hive that I think is probably the only one that is 100% renewable. All the other ones, they are not really making sustainability kind of like their main focus. And I wonder, as an investor, and especially looking at AI infrastructure, right? How sustainability is important when you are talking about data centers.
Yeah, I mean, data centers and sustainable energy don't go particularly well together.
Okay.
Because the uptime's not good enough. Your wind power is quite intermittent. A lot of renewable energy is quite intermittent. And that's why it actually suits Bitcoin mining so much better. Around 56% of Bitcoin mining is sourced from sustainable energy sources now. And so that's actually a very positive thing. That's much higher than, the global financial industry, for instance.
Yeah.
And I think the big trend that we'll see over the coming few years is Bitcoin mining competing with AI for rack space. And what I expect, those mega centers in Texas that have been created for Bitcoin mining, we're already seeing it happen. You look at Core Scientific's Twitter account, you can see racks that were holding Bitcoin miners are now holding AI, Blackwell chips. And I think we'll see an increasing instance of that. And these big secure sites that are very well suited to AI, it will push Bitcoin mining out. And we'll see Bitcoin mining move more to the fringes. And I actually think this is not a worrying thing. This is actually a very good thing. It will increase the decentralization of Bitcoin mining away from these mega centers. And it will also force it into renewable energy, which is, from an environmental perspective, very positive. It gives those renewable energy initiatives a quicker capital repayment because the excess energy that's created, which often is the case in renewable energy, when there's too much wind, what do you do with that excess power? You can monetize that now with Bitcoin mining. Bitcoin mining also doesn't really care if it's turned off and on, minute by minute. And so it can load balance, it can respond. And so I think it'll always have a place in Texas to some extent, just load balancing grids, but it will particularly be much more favored in renewable sites where there's excess energy. I mean, here in the UK, for instance, 2% of wind energy is never used. You can monetize that and accelerate capital repayment programs as a consequence of that. And I'm involved in a Bitcoin mining company doing exactly that because I think it's a really exciting space for the industry.
100%. I do agree with you. I think, kind of like the traditional natural resource industry, especially oil and gas, they're kind of, and also, generally natural resources, I think they are thinking about ways to monetize everything as much as they can. You know what? Why not? I mean, why you kind of monetize waste? You should, Okay, so that is definitely going to be another trend to watch. Is there anything else that we left out that maybe you think we should spend a couple of minutes to talk about?
Yeah, I do. I think the one final one, I don't think enough people are talking about this. It's the tail risks. By definition, not likely to happen, but I think we should be cognizant of this. And that is Japanese bond yields. 20 years are rising up to alarming levels not seen for 25, 30 years now. 40 years record highs. Where does that leave Japan after sort of a banking crisis in the 90s and then QE for many years? It was a way of keeping a lid on the problem. It has huge government debt, 260, 270% of GDP. Bond yields continue to rise. How can they pay that back? We might end up seeing a lot of Japanese bond investors for US T-bills, for instance, repatriate their money back to Japan as a consequence of this. The end of the yen, what they call the yen carry trade. And this could cause huge ripple effects over the global bond market. Much higher bond volatility, potentially plunging, much higher bond yields in the United States, so plunging bond prices. It could be very destabilizing. And I think the initial reaction of Bitcoin price will be negative because it's got that growth component I talked about earlier on, and it's that risk event. But I think people will start scrambling for assets to diversify. and they will come back around to something like Bitcoin because it's separate from the global financial system.
I was just thinking about that. If they are getting out from that, from that, maybe Bitcoin could be the asset, so that those money will be looking.
Yeah, I think it will. I mean, we saw hints of that in March 2023 after the Fed had engaged in a very aggressive rate hike cycle. At that point, it started to put so much pressure on US financial institutions. We started to see the collapse of banks. Silicon Valley Bank and a few others are a good example of that. And at that point, a lot of investors started panicking. Where can I put my money? Where is it safe?
Yeah,
It's not even safe in a bank anymore. And actually, if you look at the fund inflows into Bitcoin at that point, they were very strong. And we even had clients saying to us for the first time, I'm looking for something that keeps me completely separate for the global financial system. So whilst, it would be very destabilizing for price initially with that kind of crisis, and it is a tail risk, and in the long run, I think it would be very, very beneficial for Bitcoin prices.
Very interesting. Thank you, James, for bringing it up. It was great to have you on the show. Thank you.
It's my pleasure. Thanks for having me.